Hi everybody, welcome to the best performing ETFs currently in Australia. My name is Russell Markham and I'm the Director of Education for VectorVest Australia. It's my pleasure to conduct the webcast today. So with that said, let's jump into it. First and foremost here, let's move myself out the way. Please note our license number here, and you can check us out more per our web page there. In addition today, please note we're only giving general advice. If you need personal advice, please do speak to your financial advisor. Past performance not guarantee future results. Forecasts and backtests used or discussed in this presentation today are intended as a guide only, and the actual results may be affected by known or unknown risks or uncertainties and therefore may differ materially from the results ultimately achieved. Alright, with that said, let's jump into VectorVest. So in the VectorVest software, what we do each and every day is we sort our technicals. The best performing ETFs are brought up right at the top of the list. So straight away, here's your starting point. As of the 11th of October, 228 ETFs are found, and these are the best ones right up at the top of the list. So when you jump into VectorVest, per our viewers tab here, if you go to ETF Viewer, there it is, the best ones at the top of the list right up here. And as you scroll down further on down the list, the ones down here, these are the ones that are not performing as well. All right, so straight away, that's your starting point. So what I want to do today is I want to go and find the ETFs that are breaking out the best in price currently, because we want to find the best performing ones. To find the best performing ones here, we need to concentrate on the ones that are technically breaking out the quickest. So what we've got here is we've got this indicator called relative timing. It's on a scale of 0 to 2. So the higher above 1, that score, the better the ETF is performing. So it looks at the direction, magnitude, and dynamics of a price history, which are used to determine relative timing. So it's on a scale of 0 to 2. The higher above 1, the better it is performing. So if we go back to our list, then we sort our ETFs based on relative timing, RT standing for relative timing. You can see out right up at the top of the list here, this ETF ultra short NASDAQ. It's a Contra ETF, so it does the inverse to what the market's doing. We'll cover more of that shortly. So when the market is falling, the Contra ETFs would go up. All right, so no surprises to see that this one's been performing in the market pullback currently. And so this one here, BBUS, it's also a Contra ETF, so it's going up as the market goes down. But having said that, you'll see there's several other ETFs here that are also performing very well. There's always a sector or industry, irrespective of where the market's at, that's performing, and these ETFs pick up on those themes as they take place. So here is your competitive advantage right off the bat, straight off the bat. All the best performers right at your fingertips each and every day via the ETF viewer. It doesn't get much easier than that. All right, so the best performing relative timing, these are the ones breaking out the quickest currently. So using this technique, if I go and graph an ETF and I put on our relative timing indicator, what our relative timing indicator here is doing is looking when the, looking at where RT is breaking above 1. So we put on our graph here, relative timing, where is it breaking above 1? Here we see it, oh, it just breaks through 1 recently here, just rockets up, comes from a low point, rockets up. Nice, this is a good breakout taking place in terms of the momentum. So you can see here, the price was at $4.73, and as of yesterday, it closed at $5.83. So you've got a nice gain there of about 23%. Very nice indeed. Relative timing is not broken below 1 yet. So if I was looking currently in the current market looking to buy an ETF, this one would certainly jump out at me. The technicals are doing what I want them to do. It's holding above 1. Now, I can't tell you personally whether this is right for you. You need to speak to your financial professional. But from a general advice perspective, using the VectorVest system, short-term price momentum breaks above 1. We note that that is bullish for the short-term price momentum for that ETF. So right now, as relative timing is holding above 1, this is a good looking ETF from a momentum perspective. All right, using the technique again, here we go, BBUS, relative timing breaking above 1 here on the 14th of September. Price was at $10.27. Price is currently at $8.53 as of close of business yesterday, up for a total of 22%. All right, so it's nice and easy to visualize, to see this as it takes place. Here we go again. Look at this. So it comes below 1. It was sort of hugging the 1 line. It goes below, breaks above 1, and then up it goes. Very nice entry point there at $10.84. Price is currently just shy of $14 for a whopping 28% returns. That's since August, right? So that's since August. So less than, what's that, or just on 2 months. Very impressive. All right, here's the technique again. All right, breaks above 1. Really rockets up above 1 here. It's held above 1. Here it just went to touch the 1 line on relative timing, but it's held above 1 and it moves up. Very nice indeed. 20% returns. All right. So where am I getting these from? Remember, all I'm doing here is I'm just running it based on relative timing as of a given day and just showing you how these have performed. So on any given day, what you do is you'd load up VectorVest. So this would be one of the ones that come right up at the top of your list. So right now, as of today, if you were to load it up, this one would pop up at the top of your list. Here is your relative timing, still holding above 1. All right, you might have said, oh, but it's all very well in hindsight. But here it was above 1, here it was above 1, here it was above 1. All right, if we look at the one prior to that, where was it? Here it was above 1, above 1, above 1, above 1, above 1. So the idea being, if you buy into those ETFs where the relative timing is holding above 1, you're putting yourself in a very good position to pick up on the momentum. All right, so here we go. Another one here, breaks above 1 here. Brilliant, right? Touches on the 1, but continues to power up. There's 20%. All right. This one here, just the other day, 6th of September. It's just on a month worth here, just over a month. And look at that. Up go the technicals, up goes the share price. It's up a whopping 14% in 1 month. That's very impressive for a month. All right. So what I'm going to do now is I'm going to combine this. So we're going to combine 2 indicators together shortly. I want to look at a technical indicator combined with another technical indicator. But before I do it, I want to introduce you to this next indicator, Comfort Index. It too is on a scale of 0 to 2. Right? It's an indicator which reflects a stock / ETF in this case, stock's ability to resist severe and or lengthy price declines. CI is based solely upon a stock / ETF's long-term price history. All right. So if I go and sort all the ETFs here by CI, Comfort Index, let's go and have a look. So using this technique now, it breaks above 1 here. Do this, and the CI holds above 1, still holding above 1. Look at that, up for a whopping 43% returns. Very impressive. All right. Just to show you, sometimes it doesn't always work out perfectly. Here we're at break even. It broke above 1 here. The ETF did move up. You're up a couple of percent here, but it started to roll over. All right, back to break even. So we got in at 24.57, and as it turned out, closed business yesterday, it closed at 24.57. We don't get disheartened. We continue to follow the technique. CI breaks above 1 on the 3rd of December last year. It has not fallen below 1 since. It continues to hold up 13%. 13% for this year so far is very impressive returns compared to what the market has done. All right, so we hold our nerve. We do not get out until, in this case here, if you're using CI to guide you, until CI breaks below 1. All right, moving on to the next one here. SNAS, it's a Contra ETF. Here the CI breaks above 1, holds above 1, and look at that. Very nice trend here. I really like the way the CI is moving up quickly. And this shouldn't surprise you as the market comes off. So as the market goes down, the Contra ETFs do the inverse, they go up. Here we go. ZYUS is the ETF. It breaks above 1 here at 101 and continues to hold up. It's up 7%. This is really impressive returns considering what the market has done. All right, so this technique here is open season as such. You can do it whenever. All right, but ideally what I'd like to do is I'd like to combine this technique in a rising market, not in a falling market. At VectorVest, we advocate buying rising shares and ETFs in rising markets. Of course, Contra Etfs are designed for falling markets. All right, so let's now put the two together, relative timing and CI, the comfort index, together. So we'll find those best combinations of technicals by combining the two together. So remember what relative timing is: short-term price momentum. CI effectively is looking at the resilience of that ETF. An ETF with a high CI score is resisting severe and or lengthy declines in price. So putting the two together, RT now times CI, using VectorVest to find that for us. So we can go and find, look, no surprises, the ultra short, so this is the inverse ETF. It's rocketing right up here. It's got a CI score there of 1.18 and RT of 1.86. Put the two together, it comes to 2.19. Multiply the two together, so RT times CI. So you can see it comes up the top of the list. And as you scroll down here, you can see all these other top performers there. Let's go and have a look. So if I put the two together, here's RT and CI. So what I'm looking for now is where RT and CI holding, when they're holding above 1. So CI was below 1, it then breaks above 1, and we corresponded with an RT above 1. Look at that, up 23%. So CI continues to hold up. Relative timing continues to hold up. And look at those returns, up 23 odd %. All right, so it gives you lots of confidence now that these two are working in tandem. Here's another ETF. Look at that, 7th of October, so just the other day. RT and CI are now above 1. So RT had actually been above 1 for quite some time. CI then eventually turns around at this point here, provides you a very good entry point. And look at that, just a couple of days there, what, 2 or 3 working days, up 5%. That's phenomenal returns for just less than a week's work. All right, now look at this one here. CI breaks above 1 here. Relative timing has been holding above 1 for quite some time, so it continues to power on. Here it starts fading. CI touches 1, but it doesn't go below 1, and it starts to power back up again. In the interim, or during the whole time period here, relative timing continued and remained above 1. So it gives you confidence that the momentum is still holding steady. CI was just sort of coming off a bit as there was some volatility, but it continued to power back up and hold above 1. All right, so there, look at that. You held your nerve using the CI and the RT to guide you, and up 13%. Let's have a look at this one here, fuel. So CI breaks above 1 here at 1.01. And relative timing is holding above 1. Now, look at this. If you're using the two in combination, here you would have got out. All right? Even though CI is holding above 1, you would have looked to get back in here where CI holds above 1 and relative timing goes above 1. There it just goes and sort of touches again, so it powers on. But at that point, you might have got out again. So you might have taken out, jumped out here, and then got back in as it powered back up again. Depends on how you want to use the tools. Now, what I've done here is I've just said, look, if CI just broke above 1 or use CI on its own, you would have been up a whopping 36%. If you're using the two in combination, so here breaks below 1, so here you get out, you probably lose about, say, 2 or 3%. Then it breaks above 1 with CI again, and it runs all the way until it cracks at that point there, and you jump out there. You would have picked up a good 20 odd %. Here you jump back in again as it breaks above 1 in combination with CI, and jump out of here. So you would have got fairly similar returns, but you would have been in and out a bit more. So it depends on how you want to use the tools. Do you use relative timing on its own? Do you use CI on its own? Or do you use the two together? Me personally, I like to use two combined. All right, so the next thing I want to cover here now is that we know that the market for 2022, it's been in a downtrend for quite some time. And as the market continues to trend down, what can we do to continue to make money in the market? Well, we've shown you these wonderful techniques using the momentum indicators and the ETFs, so some very good returns. But we've got another technique that we've covered today, so let's go into a bit more detail on it, and that is to look at Contra ETFs. So these are inverse ETFs. Contra ETFs are designed to go up when the underlying index or commodity or sector falls. Now, in a falling market, typically most sectors and industries tend to go down in a falling market. So in a falling market, we want to look at these Contra ETFs to help us make money because they are designed to do the inverse, go up when the market goes down, and go down when the market goes up. So you might want to jot these down. Here are the Contra ETFs in Australia: BBOZ, BBUS, BEAR, and SNAS. So as the market goes down, these are designed to go up. So what I've done here in VectorVest is I've benchmarked these for you in our tool here, our benchmarking performance graph, and I've benchmarked it against the AXJO, the ASX 200 index here. So you can see the 200 index over the last 6 months, it's been falling. But despite the falling index, look at the outperformance by these Contra ETFs. They're up massively against the index. You can see here for the duration of the last 6 months, the AXJO is down a couple of percentage points, but look at this. Look, BEAR is up, what's that, about 8 or 9%. BBOZ, what's that, about 17%. SNAS is our leader up at the top, just shy of 60%. And BBUS, look at that, it's up just shy of 40%. So a massive outperformance compared to the market. Now, with these Contra ETFs, just a word of caution, as soon as the market starts to find a bottom, starts to come up off a market bottom, you want to be careful, because at that point they're going to start falling in price. So looking at the overall market, we have this wonderful tool in VectorVest, our market timing indicator, and we use, for example, our confirmed signals, our most conservative signals. We've got different types of signals. This is our slow signal, but you can see here the market went into confirmed down in early this year. All right, you can see, and it stayed down for a long period of time. And then sort of coming into August, we had a brief rally. And as of 1 September, we've gone back into a confirmed down. So the overall market, as tracked by VectorVest, over 2,000 stocks that we track every day, this is what we use for market timing. So we're not a ASX 100 or ASX 200 on all odds tracking system here. We look at the entire market, bar a few very small stocks that literally have no liquidity traded each day or no volume. We exclude those to make sure we get as clean a picture as possible. And this is the overall market as tracked by all the stocks. And you can see it's been in a strong downtrend for 2022. So this is where your Contra ETFs come in to really help you in a falling market. So let's have a look. As of 1 September, there VectorVest told our subscribers, be careful, the market is falling. So as of 1 September, if you were to go and pick up the Contra ETFs, so 1 September 2022, here they are, the 4 Contra ETFs. 1 September through until the 11th of October, we're still in a confirmed down market. And look at those returns. 25% for SNAS, BBUS at 21, BBOZ at 5, and BEAR at 1.7 for an average there of 13%. The market during this time period has fallen 3%. All right, so the Contra ETFs have way outperformed the falling market, and that's what it's about. It's about empowering you with the tools using VectorVest so you can make money in the market. And in this case, even though the market was falling, look at those wonderful returns you could pick up. Now, I don't know about you, but when I showed you this graph, I know a lot of you are probably thinking, show us the returns from here. Using the Contra ETFs, I'm going to show you that now. But I just want to point out this word of caution. As the market falls, all right, so as it falls, you want to be careful, because as soon as it starts to pivot and starts to come back up, at that point there, you want to jump out of your Contra ETFs Again, please speak to your financial advisor for personal advice. I can't advise you personally, but teaching the theory here behind VectorVest, as the market pivots and starts to come back up, Contra Etfs will do the inverse of the market. So if the market's going up, well, they're going to start going down. So you want to look to be exiting out of those positions as the market pivots. Now, based on this, around about early July, we're definitely seeing that turnaround there in the market. You're really starting to see a strong trend now starting to develop to the upside. So based on that, if I were to go in here as of 1 September, so back here, and jump out as the market starts to pivot here, it's a real strong rebound. It really is starting to change. So by early July, we jump out. All right. So if I go 1 September through until the 11th of October, as I've shown you, remember that. So this was this one here. 1 September until current date. So as the market goes down, we're not going to jump out yet because the market hasn't turned, but let's now show you this. All right, so to show you this one here, here we go. 14 January, so going back here, 14 January, all right, run through until the 1st of July. Why the 1st of July? Because that's when the market then started to pivot. All right, look at those returns, 30% when the market went down 15%. That's the power of VectorVest. All right, it shows you clear signals, when to buy, what to buy, when to sell. We're showing you the market's falling. These are the tools to make money in a falling market using the Contra. So we can way outperform the market in this instance. So if you like what you see, why not try out VectorVest for $9.95 USD, called around about 13 Australian dollars. You can trial out VectorVest for 30 days. Now, during your trial, you'll get 30 minutes free training by one of our Melbourne-based consultants. You'll also get invited to a monthly online VectorVest investment club/gathering. The next one there is on the 22nd of October, and we're going to be covering strategies for coming off a market bottom. So we're getting ready for when the market turns. We're getting our shopping list ready because there's some great bargains out there at the moment that have been beaten up in the market that will explode upwards as the market turns. So if you want, take out a trial before such time and you'll get invited to our online investment club on the 22nd. It's a great club there. We cover so much good things each week, so many good things, or should I say each month. And of course, during the weeks, of course, we have our weekly videos and essays. Each week we write on about what's working in the market, and we show you how to make money each and every week using VectorVest. You can also get access to all of our portfolios that we track each day. So we're not fund managers, we're not brokers. We build and design portfolios, and we show you exactly what's taking place in them each day. And if you choose to follow them, then you are empowered to do so. All right. So you get all of that. All right. If you need to get hold of us, email support@vectorvest.com, and you can always email me, russellmarkham@vectorvest.com. And you can also call our toll-free number. A toll-free number, 1-800-303-782. Now, what I want to do here is I want to show you the VectorVest web page. So I'm just going to load it up, vectorvest.com.au. The other place that you can find out more about us here, www.vectorvest.com.au. There's our toll-free number, and you can click here to take out a trial. So a toll-free number here, click here to take out a trial. All right, we also have a live chat blog there too for you. All right, so email support@vectorvest.com. You can email me, russellmarkham@vectorvest.com. You can also call our toll-free support number there, or you can also access your trial via the www.vectorvest.com.au website, and you can click here to take out a risk-free trial. Now, just before I let you go, what I'm going to do here is I'm going to jump into the VectorVest system. So let's just have a quick peek here. Here we are, ETF viewer. So if I wanted to go and find the most explosive upward breaking ETFs for the technicals, here they are. And as of the 11th of October, I can come in over here. Let's scroll all the way up to the top here. Here we go. And I can now find the best performers. And here we are. Look at that. SNAS as a top performer, followed by our second Contra BBUS. And I can graph them. and I can see exactly what's taking place each and every day. So I can go, okay, here are the technicals. Yep, I can see it's breaking above 1 here. It's still holding above 1, so that's boding well for an entry right now if I were to consider it. All right, same for BBUS. Look at that, holding above 1. The technicals are doing what I want. Look at this one. Brilliant. Look at the technicals are really rocketing up nice and strong over here. You can see they broke at that point there, just above 1. Where was that? 16th August. And look at the price really motoring away. So straight away, there we go. Or if I prefer, I can come in here and say, well, VectorVest, find me the comfort index. I'm after those really comfortable ETFs that are breaking up to the upside, and I want to make sure they're holding nice and steady. So I'll just grab a first few here, graph them, put on my comfort index instead. Let's just change the style, make it stand out a bit better. There we go. And I can look at this. Now, I don't know about you, although the CI has broken above 1, which I really like, and it's held above 1, the CI is just starting to trend down a bit. So I might just give that one a miss and say, well, look, yes, on average it's holding up, but I want one that's rocketing up. Now, this is a recently listed one. Yeah, it's just, it's holding, but, now look at that. Now, that's much better. That's what I'm after, right? So here I look at this and go, okay, look, CI above 1 is good, but a CI above 1, holding above 1, where it started to power back up again. That's what I'm after. And look at this one here. So this might make a short list for me to investigate a bit further. All right, same as this one here. Look at that. Breaking above 1, trending up. Look at the trend taking place right there at your fingertips each and every day, just there. And what I can do then is I can then say, okay, well, what if I were to go and find RT and CI combined? All right, so again, I just come in here, grab the first couple here, graph them. I'll put my RT and my CI. Let's just make this stand out a bit more here. All right, so we are RT and CI, and away I go. I can zoom in and have a look. Okay, yep, holding above 1, good. That's what I'm interested in. I want these two to be holding above 1 and preferably both trending up, which they're doing. All right, look at this one, doing that as well. This one here, wow, this one's really doing it. Both trending up really, really well together. And this one here, yes, bit of a pullback, but up it goes again, good. I like the look of this one. This one here, they're starting to converge a bit, even though they're still above 1, so I might skip that one for now. There it is, each and every day, right at your fingertips. It doesn't get much easier than that. I hope you've really enjoyed today's presentation. I really enjoy presenting on ETFs because VectorVest just makes it such a treat, and it's just so easy to do. I'll leave it there. If you want to get in touch with us, don't forget our website, www.vectorvest.com.au, where you can also take out your trial. Thanks again. I hope you got a lot out of it. Bye for now.